Jumping on in on the market update here. Here's what you can expect in this video. We're going to talk about local numbers. We're going to talk about a little bit of national numbers. We're also going to talk interest rates and some of the other things that are affecting the values of real estate right now and some of the projections. So cost of goods, tariffs, that kind of stuff. But it's going to be punchy. It's going to be like 10 minutes worth. So if you're interested in that stuff, hang out here for the market update. So Kansas City focus first. Let's make sure that we're clear on this. Kansas City prices are up 5.9%. The average across the nation is like 3.9 year over year, which means we're trending better. Sales are down a bit to 2,071 in the local MLS, closing with 2,499 homes pending. That's traditionally a pretty good number, but year over year it's down a little bit. And here's the number that I think is most important is the average is 56 days on the market. We're seeing this continue to climb, and this is where I'm going to encourage sellers need to sharpen their pencils. What I notice is on a general basis, when I talk to sellers, the only thing that sellers ever recognize is the hottest the market ever was and the most your home was ever worth, and they hold there forever. But the reality is 56 days on the market, you probably need to price down a little bit based on what you think you should sell your home for. If you were thinking 2022, 23, 24, I'm going to sell my home. Now, values are up across that time, understand that, but there's a lot of them available now. So there's some numbers that are conflicting here, and I know it can be confusing for people, but approaching 2 months supply, it especially feels different. Understand when you're a seller and your home is sitting on the market for 56 days, and most sellers still are thinking that their home should take about 56 minutes to sell, that can be a big deal. All right, so sellers, price your home sharp and stage your home to sell it fast. Buyers can make a deal. There's 6,185 homes for sale across our entire MLS. That is up a little bit. I'm getting a phone call here. I'm not editing that out. I'm leaving it right in because we don't edit. We're going to talk a little bit about how the mortgage rates, the price of goods. Here's what I'm hearing from people that are in the industry. So let's say construction industry, lumber, concrete, all goods across the board involved in building a home. Here's what I'm concerned about. This is a little bit of a projection piece, meaning what I think may happen in the future that I'm concerned about is I do believe that Donald Trump will push down on interest rates because I think that's just something that I've seen in his past behavior that he believes that that's the right spur of the economy is to drive down on the rates. Now projections across, and it's down in the email below, you can see that most people think it's going to be somewhere between 6.5 and 7. I think he's going to get pretty involved in that to try to stimulate the housing market. My concern about that, even though it'll be good for me in the short run, it's going to make it less affordable for buyers, especially first-time buyers. We're seeing those numbers continue to rise at a rapid rate, and it's difficult for people to get in and buy a home. And it's not our problem. It's not addressing our problem. Our problem is there's technically not enough homes for sale. There's not enough new construction homes for sale. And that's been a problem we've been dealing with for years, and it's just now coming to a head more than ever. So I'm concerned that if rates come down, values go up, pricing goes up, that's a concern. Now, the other piece is tariffs. We've got 6.5% interest rates paired with tariffs from Canada, China, bringing up home costs sometimes between $2,000 and $10,000. Now, I'm not going to get into the political side of whether or not tariffs make sense, whether or not it's going to work out in the long run. Generally speaking, I think everything works out in the long run. So that's not a political statement. I just think everybody's going to be fine. I bought and sold my personal real estate at the worst times ever, and it still ends up being the smartest thing I ever did. So I think real estate's a great investment across the board, and you should not stay out of the market based on the news for sure. But there are some things, especially for home builders, especially for high-end builders as an example, there are some concerns here about affordability and profitability for those companies. So that's something that we're going to keep track of. Now, on a micro level, getting out of the national scene just a little bit, it just feels like there's more houses for sale, right? Even though, we're just comparing it to maybe a few years past. I think there's something real about that there are people that are motivated in the market that need to sell their homes. They're pushing them out there. We're meeting with them every single day. And if you're a buyer thinking about buying a house, what I would suggest to you is, if you take a little bit what you consider to be a higher interest rate, let's say you close at 6.75 today, it's going to be better than waiting for rates to go to 5.75, and then now the $400,000 house that you were trying to buy is now trading for $450,000. So we can do that math, show it on a graph, and show you both of those numbers, especially if you're going to live the home for 5, 7, 10 plus years. It makes sense for you to buy a home now. Understand, as a sales guy, it always seems like I'm saying it makes sense to buy a home, but it almost always does. And if we look at the trends over years, we looked at the past 20 times in the news that basically most people thought that the real estate market was going to crash, or that the stock market was going to crash. We looked at the last 20 events over the last 25 years. And then we took and did a trend and looked at what happened to the real estate market and the stock market between the time that everybody thought it was going to crash and now. And let me just cut to the chase. At any time in history, if you were to buy just about anything and hold it until now, you would be absolutely rich based on the returns of the stock market and the housing market. So try not to, especially just buying your own personal house, try not to get too caught up in the hysteria of whether or not it's the perfect timing. You know, in my 401k, I don't get involved in timing. If the news says the stock market's going crazy, over time it's going to correct. Over 3 months it's going to correct. I don't time the market. So based on your motivation, find the best opportunity and buy a house. Just like I would say, the stock market's going crazy. It's lost a bunch of points last week. It's probably going to gain a few back this week. My general advice there, and I'm not a wealth advisor, but I'm just making the analogy here, invest in your 401k. By the time you need it, it's going to be worth more, right? Okay, so if you have specific questions, subscribe, like here, send me a DM. We're going on appointments every day. Let me lower the bar here a little bit. If you want to have a conversation about your house or the house you're thinking about buying, reach out today. The reason I'm making this video, the reason we send this email out is I'd love for you to reply to it. I'd love for you to reach out and have me come take a look at your house, or have a conversation today over the phone about what your goals are for 2025. Hope you find this helpful. Talk soon.